Hey there, everybody. This is Bob with Trade Genius. Got my good friend Phil here. Yesterday, we talked to you about the consumer is in a funk. We're going to show you why that is. Stay tuned.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Okay, Phil, consumer is flashing the white flag here. They're not going to buy anything unless they can eat it tomorrow. Okay. And so they're pretty much at wit's end before major defaults. Why do you suppose that is?
Well, you got a clue yesterday with consumer sentiment data, right? The buying demand's going to be not so hot. And I think the reason for that, though why we're seeing that, is because the employment data isn't so hot. Now, we've talked about the unemployment rate, those rounded bottoms that you see before a recession. Well, we're going to zero in on that a little bit more today. Here's a comparison of where we're at today. That's the current box in the upper left corner, Bob. We're up about 0.6% off the lows. Why that matters is that when you get into a pre-recession environment, that increase leads to a very sharp increase. So if you look at what happened most recently in 2007, we had the same rounded bottom. And once we cracked over that 0.5% increase, we went vertical on the unemployment rate. And doesn't mean the market's going to tank tomorrow. Actually, the market will probably go up with jobs falling or unemployment rate increasing. And it's going to be weird, but that's just the way these markets work when they blow off. 2001, same thing. Rounded bottom, you get to about 0.5% or plus off the lows and go vertical on the unemployment rate. And then the same before that in 1990, that was when the Japanese bubble busted and things were really bad. I remember we were in construction. I was a kid at the time, and construction got really, really slow at that point in time. So I think we need to keep a very close eye on unemployment, Bob, because as we progress through the next few months, we should start to see that rate increase. And this is what's going to give the Fed ammo to cut, especially when the unemployment rate starts to get toward that 5% mark. We're going to go into, I think, a phase of where bad news becomes bad news again, Bob. Right now, bad news is good news because they think the Fed's going to ease, but the institutional players know that that's not really what it's about. It's about they're going to cut because of a reaction to softening economic data, which green lights the move into bonds. And then we have to look also at the trucking sector, the all-important transportation sector where goods flow, right? Well, trucking employment is falling. That typically leads the private sector, which is why those charts we just looked at are probably going to start going vertical in the unemployment category. Trucking falls, we're now under zero, we're now negative on year-over-year changes in truck transportation employment. That leads the private sector. So that's going to lead those charts we just looked at. Those charts, those vertical moves are going to come in unemployment. And when we get a sharp move under zero on year-over-year changes, meaning that we got negative year-over-year changes in truck employment, and the rate of change is like what we see here, that's always a recession, Bob. So I think the picture we've been painting for the folks over the last few months, starting last year, when we said, hey, look, this is not going to end well. Now we're kind of rounding that corner. We're in the ninth inning of this game where, maybe we're going to hit the grand slam, but after the season's over, we might be on a player's strike.
That's for sure. And it was amazing that Jerome Powell called out the Biden administration during his presser too. That's
Yes.
unheard of.
Unheard
He
of.
knows that they're going to try to pin this recession on him, and he's not buying it. He's like, you're giving people false hope here, buddy. And also, look, if the unemployment rate was unskewed, we'd probably be back to 0% interest rates again, because
Right.
people don't realize really how fragile things are. The only jobs that are going begging are the jobs that don't pay enough, and so it's really interesting. And, companies aren't hiring unless they absolutely have to, because they know that they're going to be stuck with costs they have to get rid of in the next 6 to 9 months.
Yeah. So, I think the consumer data is going to continue to suck wind because there's just the job growth is not there. You get jobs and job growth, consumers out spending money. So I expect expect over the coming months that as we get this weird disconnect from the markets again, I think it's going to feel like COVID, where it's like, hey, the stock markets are going on new all-time highs, but the malls are empty, and I think you're going to see something similar, but just keep in mind that this time it's more a function of the last of the leverage in the system getting blown off. Janet Yellen's going to be doing the last of her T-bill pumping, but in reality, it's just setting up for fall, and that's where you get those Eiffel Tower moves where you get a sharp peak in the market and then a sharp drop. So I fully expect to see something like that, especially as we get into Q4, and really whether it's before the election or after it, it could go either way, Bob. We've seen a sharp drop just into an election before, and it really depends on the structural integrity of the system in terms of, are things solvent under the hood? Because there's entities right now that aren't doing well, that are in trouble. Maybe one of these big market makers blows up because, who knows, maybe a meme stock destroys them. It's any number of catalysts can happen when things get frothy like this, and it's all built on leverage because there's no broad, GDP is not expanding, 401k flows are not expanding. This is, I think, just the last hurrah in things, and it's just not going to end well.
No, and they went from 3-day to 1-day settlement too. They're desperate to keep retail in the game. So I wouldn't be surprised if they go to no settlement here before the whole thing blows up. But yeah, I totally agree with you. Look, the cake is baked, and I just know, just the area that I live, the only Hope One signs out there are for basically minimum wage jobs. So other than that, people that I know that own their own companies, nobody's hiring. Everybody's in not so much hunker down mode, but like everybody has their hand on the trigger. They're going to bail fast. At this point now, Phil, everybody knows something's coming, and the election's the catalyst. I think either way, regardless of who wins this thing, is never in a politician's best interest to allow the first year of an administration economically does well. It's usually when you get a lot of positioning. So, buckle up. It's going to get really interesting out there. Guys, if you want to trade with us, go to tradelikeagenius.com. We got some really, really cool indicators that you can still trade even through this mud. And it'll get you on the right side of the trades. It'll force you to accept the fact that you're not paying attention or you're trying to fight the markets. And definitely when you're in alignment with our algorithms, you're going to do well over time. So check us out. Check out our specials. What we charge for the service is nothing to what you get out of it. So with that, Phil, enjoy the rest of your weekend. Notice I got the tan already and I'm in, June gloom, and you're sitting there in sunny Hawaii, but I guess you're up in the cloud forest right now.
Yep, hanging out with the clouds, getting no sun.
All right, guys, we'll catch you later.
Trade Genius.